What is good, YouTube? Today is January 22nd. It's currently 12 o'clock. Trading session is still going, but I'm done for the day. I'm going to be here explaining my trades for today. I did not trade yesterday, Wednesday. No trades were taken, so no upload was posted. There was actually a few opportunities, but market was just, we rallied up like 200 points. I couldn't get an entry. We randomly flipped like 200 points to the downside. Didn't like anything. I was pretty much tapped out. It was like 11 o'clock. I was just pretty much done with the market. But coming into today, we ended up fully flipping our new week opening gap from Sunday. Today is currently Thursday, so it took 4 days, but we finally ended up flipping our new week opening gap, and we ended up leaving this 1 hour bullish gap behind. We ended up leaving this 4 hour bullish gap behind, and we're finally showing bullish order flow, you know, which we haven't been seeing in a long time. If we take out our marker or our arrow, we see that we're creating, if you want to count that as a high, we're creating lower lows, lower highs, lower lows. We did kind of flip trend here, but overall trend is showing us bearish. We failed to create a higher high right here, another lower low, and we're just, we're creating that bearish order flow. But after yesterday, we can see that we finally flipped. And we did flip this new week opening gap to the upside. Now coming into market open, seeing that we did have a 1 hour gap and a 4 hour bullish gap that would have closed by 10 a.m. My thought process is, I want to stay above this new week opening gap. I want to stay above this 1 hour, 4 hour bullish gap. I want to see us tag back into it, and then potentially we can target our draws to the upside. So basically I'm saying we can tag back into CE, or potentially, we tag out our PM high, we tag out at this PM, we tag out all these draws we have to the upside. That was potentially what I was looking for. Obviously, trading market, nothing goes your way, but we do react, and we are not, everything we do is discretionary. So we see this 1 hour gap here, and we let market play out. Whoa. Straight candles to the downside. There was actually a play I was looking at before anything even happened. I usually don't trade the first 15 minutes of market, but today I was looking to dabble in to potentially look for a trade. And so where was it at? As we could see, we had this 1 minute bearish gap right here. And if I come here and I put this 1 hour on our chart, we can see that right here, it was 4 minutes into the open actually. We tapped CE of this 1 hour bullish gap right here. We ended up inversing this bearish gap to the upside, and I was potentially looking to take this long off of it, potentially to the relative equal high that we have up here. But market just didn't end up retracing. We ended up creating a 5 minute bearish gap. Yeah, I remember. That's what happened. We ended up creating a 5 minute bearish gap. Not that it probably had any impact on price, but price just is super wicky in those and manipulative in those first 15 minutes, which is why I usually don't trade it. I took a jab at this with my stops, like right here. It was a pretty cheap trade. I probably should have went stops to break even pretty quickly. I did not. But we had this bearish inverse, and we tapped 1 hour CE of the 1 hour bullish gap, and I was targeting these relative equal highs. It would have been an easy trade. I'm not mad at it. That's a trade you take 10 out of 10 times when you have your system in play. But that obviously didn't work. We ended up flipping this 1 hour bullish gap. And then for majority of the session, we can see that we are in between a 15 minute bullish gap that was created at around 1 in the morning and we are between a 15-minute bearish gap that was created around 8:45. And so trading within this range is tricky, but we always have to use our higher time frame. What's the word? We have to use our higher time frame PD arrays to help us dictate what we want to do on the lower time frame. And so once I saw that we ended up flipping this bearish gap or this bullish gap to the downside, and then we ended up creating this 15-minute bearish gap, if I'm correct. Yep, that's correct. Once I saw that we ended up flipping the 1 hour bullish gap to the downside, we ended up creating this 15-minute bullish gap. Right here, we need to see price come down and end up sweeping, inversing this 15-minute bullish gap. And we also need to see price come down and take out these London lows. Due to the fact that we didn't, I was a little bit skeptical. We ended up creating a stack of relative equal lows below us, which we have right here. And so I see that we're consolidating in this range right here. I'm waiting for this play to set up, and we come back. We end up tagging the 50% CE of this 15-minute bearish gap. We also end up tagging the 1 minute CE of the 1 minute bearish gap that we have right here. Let me actually take all this off my chart real quick though. I could just delete it. Yeah, I'm gonna just delete it. So as we can see, once again, we're in between a 15-minute bullish gap and a 15-minute bearish gap. We ended up tagging the 50% CE of both the 15 and the 1 minute bearish gap. And I took my shorts off of that, and it was a pretty sniper entry. Because as soon as I took my entry, price flushed 50 points. I wanted it. What I wanted to happen was for us to end up taking out these relative equal lows that we have right here, and then potentially coming down to take out this London low that we have right here. Once again, obviously price never does what you want it to do, but we are reactionary once again. And so once I saw that price failed to sweep these lows that we have right here, I quickly closed out in profit. That was a quick 30-point trade. But I was still looking. It was pretty early. This was only at 9:40. I'm usually taking my trades later into the session, so I was chilling. I'm waiting. But that was my first play of the day, or that was my second play of the day, I should say. And I ended up being a little bit over in profit after taking this first loss. After that, once again, I'm waiting. I believe we created I don't know what bullish gap this is. That might be a 5-minute. Okay, yes, that is a 5-minute. Okay, I remember what happened right here. So right here, we ended up creating a 5-minute bullish gap. But let me really break this down. Did I have that 15 on the chart? Okay, I did have that 15 on the chart. It would be right here. So now from here, there's two things that we need to keep in mind. Let me actually go ahead. I'm gonna delete this for now, and I'm gonna delete this. So once we fail to take out and sweep out these lows and this London low, obviously using our brain, we can deduce that this 15-minute bullish gap is being held, is being respected. We ended up coming to sweep out, not sweep out, but we ended up flipping our 15. So as we can see, we do have these two 15-minute bearish gaps on our chart. Once again, we respected this 15-minute bullish gap, and once I saw that we ended up flipping this bearish 15-minute to the upside, now you're thinking, okay, clean V-shaped recovery. We now flipped a bearish gap. We can potentially be looking for longs, but we do have to wait. And I was waiting. I did just come out of taking this trade, so I wasn't really pressed or urgently looking for another trade. We ended up coming and tagging our first presented 15-minute bearish gap right here. And from here, it's just a waiting game, because now you're once again pinched between two gaps. We are pinched between this bullish gap that was respected, and we just inverse this bearish gap to the upside, which is giving us a bullish bias. But now we have this 15-minute bearish gap that is now tagged, and we are now being we can now potentially be looking also for continuation shorts to the downside, which would just be, obviously we have that, we come back, tag it, and then we can be looking for shorts to the London lows that we never took out. Once we came here and tagged this 15-minute bearish gap, I'll go ahead and delete this. We created a 5-minute bullish gap coming out of this 15-minute bullish gap, if everything I'm saying makes sense. And so once again, we are now pinched between multiple gaps, and from there is just what does market want to do. And we see that price, once we create this 15-minute bearish gap and we create this 1-minute bearish gap, we're now trading between a range, and we just need to look for which way price wants to break out. If you are looking to take shorts, you need to see this 1-minute hold. You then need to see, this is just for example, of course, but if you're looking for shorts, you are looking for price to come down, tag back into it, and then you're potentially looking for this bullish gap to flip to the downside, and you can target all of this to the downside. If you are looking for longs, what you will be looking for is this 5-minute gap to hold, this 1-minute bullish gap to this 1-minute bearish gap to inverse, and you can take longs all the way to your New York PM highs, and potentially all of this liquidity that we have up here to the upside. So once again, I'm waiting, and I ended up taking another bid after I see that this 5-minute gap was held. I kind of ended up front running it, and I took it from here to about, where was it at? It'd be around here. So this was the trade. This was the second trade I took. And once I seen that we respected this 5-minute CE, stops was below the swing low. Let me actually look right here. Once I saw the 5-minute hold, I did kind of end up front running this 1-minute bearish gap. It's a super cheap trade. It's only a 24-point stop right below the gap and right below this swing low that we have created. And I ended up taking my profit at 1032, which was right here. Price was pretty stagnant. I had stuff to do. I'm not going to wait for market. Once again, I'm not pressed. And price was looking, it wasn't looking, but since there is this first presented 15-minute bearish gap, taking this long would be high resistance, and I just didn't care to wait for it. As you can see, it's currently 12.21, and price has now flipped it, but once again, I didn't bother to stay in it for that amount of time. The 5-minute was respected. We ended up coming and tagging the CE of it. We obviously see that we had this downward spike, but price is still running. If I had to say, I would have had my draws once again up here at this New York PM high that we've never touched, but I took it right here. So those are my 3 trades of the day. I did go 2 for 3. I ended up making 3,200 between 7 accounts right here. Yeah, this would be a textbook V-shaped recovery, looking for continuation, or not continuation, but it'd be a reversal, I would say, reversal longs to the upside. I hope y'all boys and girls caught a dub today. I hope y'all end up y'all week green. Tomorrow's last day of the week. Let's end up with a bang.